Why banks love when you save money? Bank has always encouraged people to come and save money with them. If you save money with us, your phone number is your account number, and they start giving you different things. Okay, no problem with that. But why are they encouraging you to come and save money with them? Because if you save money with them, they are going to have enough liquidity to do investment. They will have enough money to do investment. So your deposit funds can be used. They can lend it to people. They can invest it in assets that you don't have understanding of. So you don't want to take risk. You don't have understanding of some investments, and because they do have understanding of those investments and they can take risk, they get your money at a very cheap rate of savings. Their savings rate, which is about 8%, between 5 to 8% in Nigeria. So they get it at that rate, and they invest in something that pay them about 30%. So by the time they pay your 8% interest rate, they still have over 20% interest as their profit margin. You understand? So since they have 20% interest margin, so it's actually a way of making money for them. So they are generating money, okay, to your savings account. You are putting your money there because you don't know what to do with the money. You are putting your money there because you cannot take risk. You are putting your money there because you don't know what to invest in. But they do know what to invest in. So they collect your money at a cheaper rate and at a cheaper interest rate, and then they invest it in medium to high interest investments, and they make the margin. So they actually have the liquidity to invest in different investments. Number two, low cost funding. Okay, so this because of the low rate they get, your money at this 5%, 8%, 1% in some 1 to 2% in some countries. Because of this low rate, they were able to do what? To make more money. So they have low cost funding. They get the money at a low cost, they invest it in something bigger. So there is money for them to spend, which is liquidity, and then they were funded at a very low cost because you gave them your money at low interest. So that is why saving money is actually a trap. Why can't you use your own money to invest? Why can't you take the risk they are taking and be making that margin and be making the whole interest rate on your investments? And I will also be talking about investment in my later videos. Also, we want to talk about smarter alternatives to grow your wealth. Now, if you now understand the fact that saving money is a trap, and you agree with me that inflation actually destroys your savings, and the power of your money 3 years ago, 5 years ago is not the same power it has today. And if that is if you agree with me on that, then what are smarter alternatives to grow your wealth? How can you grow your money and stop keeping your money in the bank and giving your money to banks at low interest rate without them even telling you thank you? Number one, I want to talk about investment in stocks. And stocks are actually equities, can offer higher returns over a long time. You are buying equities. You are being part of some companies, of some businesses. You are buying part shares of some companies and businesses. You are being part owner, and then you are getting dividend and getting some capital gains as well. So when you buy stocks, you are being part owner of a particular company, and by so doing, you are going to get higher return because you are taking risks to join that company and believe that the company will do well based on your research. Number two, another alternative to grow your wealth is real estate. Property appreciates and generates real income. Property can appreciate when it comes to land. Land can appreciate the building. You might build on it, and then you have both land appreciating, and you can also have cash flow. And some people make mistake that when they buy land, they just leave it fallow. If it's a land that you cannot build immediately, you can actually, depending on how civilized the place is, if it's a farm, if it's a place that is inside a bush, a forest, you can actually start cultivating something on it. And if it's a land that you can actually build on immediately and you have the cash, you can build. If you don't have the cash to build, you can rent it out to maybe car washers, you can rent it out to mechanics, you can rent it out to people that will actually be bringing money in for you. And in addition to that, your land is still appreciating. Okay, so the third one I will talk about is mutual funds and investment funds. So you can actually diversify your investments, and then they can be managed by professionals. You have money markets and you have bonds. You can invest your money into those things, and then you will be earning interest on them, and these interests are actually higher, and I'll be talking about them also. You see, when it comes to all of these investments, when it comes to mutual funds, paper investments, the interest rate you get is always close to your inflation. So currently now we still have about 15 to about 20% interest that is being paid on mutual fund, treasury bills, and government bond right now, and the current inflation rate is about 20-21%. Okay, so you see we have something close to 20% being earned, and then we have interest inflation rates also very close to that. So what you actually do when you invest in mutual funds, when you invest in all these treasury bills and bonds, is that you are actually closing the gap of inflation that might want to hit into your money. Like I said, when we started, that 100,000 like 3, 4, 5 years ago is about half of that. What you'll be able to buy with 100,000 3, 4, 5 years ago, you will be only be able to buy about half of that right now because of inflation. But assuming you have invested that 100,000 that 3, 5 years ago, the interest you will have earned through mutual fund, through government bonds, through treasury bills, the interest you will have earned will have covered for the inflation, and that 100,000 might have turned to possibly 200,000 or more now, and that will be able to buy exactly what you are able to buy 3, 5 years ago. In addition to that, there is another thing about all these mutual funds. If you actually continue to invest regularly, we have something we call compound interest, and compound interest, they said, is the 8 wonders of the world. I will talk about that in my next video too. Okay, so you can invest in mutual funds and investment funds. Then business ventures, starting or investing in business can use significant returns. So you can invest your money in business ventures instead of putting it in the bank. But the problem with a lot of people, and why a lot of startups and a lot of business ventures actually fails in the first 5 years of starting, is because some people do not have the passion to even start. They are there because of the money. They are not there because they want to solve problems. We are going to talk about that as well. But you can start business ventures, and I'll be talking about different businesses you can start as well. Subscribe to this channel to get some of those informations too. 5, I'll be talking about treasury bills and bonds. Treasury bills and bonds, and I've talked about it a bit when I was talking about mutual funds and investment funds. Treasury bill is also a way of putting your money, investing your money and getting a return from the government. So you have treasury bill, you have bonds, they are safe. So they are government securities that can offer better returns than traditional savings. Your traditional savings offer you 8%. Government bond, treasury bills offer you about 15 to 20%. It's higher than savings. So instead of allowing your money to be lying fallow on your bank statement, what you do is you can invest them in treasury bills, in bonds, and get higher returns. Okay, so another one is cryptocurrencies. And for those people that know me, they know I am deeply invested into cryptocurrencies, and there are a lot of things people need to learn before they enter as well. I will be talking about cryptocurrency in my subsequent videos as well. So you get digital you get digital assets like Bitcoin. Though they are very volatile, they are very risky, you have to learn how it is done, and when you learn how it is done, these are things you can invest your money in and you get high return. So 7, I'm going to talk about diversification. Now I've talked about different alternatives, smarter alternatives to grow your wealth, but diversification is also a strategy. It's also a way. Okay, so all these things I've talked about, you can have some money in all of them, in one of them, two of them, in a couple of them, like 2, 3 of them, or you can have your money in all of them. So you diversify, you spread your investment across classes of assets, and that can help you in managing your risk. So all these things I've talked about now, how do you take advantage of it? What are the things you need to consider before you can take advantage of them? Number 1, we want to know what is your risk tolerance, because different investments come with different risk, different level of risk. There are low risk, low return. There are low risk, high return. There are medium risk, medium return. There are high risk, high return. There are high risk, low return. So we have different returns, and I'm going to talk about them one after the other in my subsequent videos too. So we need to first know what is your risk tolerance. Secondly, we want to know what is your financial goal. Is your financial goal aligning with your short-term and long-term objectives? So what is your financial goal? What do you want to achieve financially? Is it financial freedom? In the short term, what do you want to achieve? Then in the long term, what is your objective? And then we want to look at research and advice. Do you understand investment? Or are you someone that used to consult financial advisors? Have you consulted your financial advisors? From your research, what are the things you get from them? And then the advice you've gotten, like the one you are getting in this video. At the end of the day, you have to make a decision on your own. I cannot make the decision for you. I can only open your eyes to what you should do, but you, at the final analysis, you will still be the one to put your money where you want. So you have to know that wealth growth often involve balancing risk. You balance risk, you balance return, and you balance your financial goals. The rich don't just save their money. That's one thing I want you to know. They put it to work. They invest in assets that grow faster than inflation. They invest in stocks, they invest in real estate, they invest in businesses. And these are the things I've talked about. These are vehicles that build wealth over time. I'm not saying you should not have emergency fund. See, when I say don't have savings or saving is a trap, what I'm saying is this. I'm not saying you don't have emergency fund. Things happen. Life can flip so fast. And you're going to need money to solve some emergency problems, most especially if you're a family man or a family person. So that's very important. Emergency fund is very important. But once you have gotten to your safety net of your emergency fund, how much is the emergency fund that you need? How much money do you need to cover for your emergency fund? Know how much it is. Then have that in savings. Then once you're able to get your emergency fund sorted out, every other money you have, you need to commit it towards investment. You need to ensure it does not lie value, losing its value in your bank account. Okay? Do not allow it to lose its value in your bank account. So now here's the question for you. Do you agree that saving money actually keeps you poor? Or do you still believe saving is the safest option? I want to hear from you. I want to have your thought. I want you to drop it in the comment section below so that we can actually start a real conversation. If you have a different opinion, drop it in the comment section below. Kindly like, share, and subscribe to this channel for more videos like this. Thank you.